Katie Stockton, founder and managing partner of Fairlead Strategies, who's taking a look at global markets relative to developed markets, emerging versus developed. At the telestrator, what's the charts telling us?
Well, it's actually a happy message for the U.S., believe it or not. We have long-term downtrends in both developed global and also emerging market ETFs versus the SPY or spiders. And you can see pretty fresh breakdowns in both measures, which would support continued long-term underperformance by international markets, equity markets, of course, relative to the U.S. stock market. So to me, that's a continuation pattern. I do think oversold conditions will give us some kind of bounce in favor of emerging markets and developed global. And to that end, I think we should probably talk about China as being really the culprit, as the most overdone on the downside here. So this is a chart of the Hang Seng Index, and you can see that it does actually have some support in this orange area here based on previous lows on the chart. Of course, it has a lower high in place, so that does reflect weak momentum there. But from the breakdown that we saw earlier this month, we've already seen what's called a measured move. So it's really reached its target already. So certainly due for an oversold bounce.
That's the Hong Kong index as opposed to
That's the Hong Kong index, right? So you'd be more concerned if it took
factors weighing on it, of course.
Of course, and that's why it's good to have levels to watch as a gauge of risk.
So just looking at these charts right now, then, I mean, we've had a number of people come on and said that EM looks attractive right now. Your response to that based on everything we're looking at here?
I would say short term, there's certainly some opportunity. Longer term, we have to see it. It needs to prove itself in terms of momentum.